Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Amkor Technology Inc. Annual Report. Amkor Technology Inc. offers a wide range of businesses and services to its clients. The company provides outsourced semiconductor packaging and test services across various regions including the United States, Japan, Europe, and the Asia-Pacific. The company's services include turnkey packaging and test services, which cover wafer bump, wafer probe, wafer backgrind, package design, packaging, system-level and final test, and drop shipment. Amkor Technology also offers a variety of specific products, such as flip-chip scale packages for mobile devices, flip-chip ball grid array packages for various applications, and memory products for system memory or platform data storage. In addition to these services, the company provides wafer-level CSP packages, wafer-level fan-out packages, silicon wafer integrated fan-out technology, lead frame packages, substrate-based wirebond packages, microelectromechanical systems packages, and advanced system-in-package modules. These products cater to various industries including networking, storage, computing, automotive, consumer electronics, and more. Furthermore, Amkor Technology offers wafer, package, and system-level test services, as well as burn-in test and test development services. The company serves a diverse range of clients, including integrated device manufacturers, fabless semiconductor companies, original equipment manufacturers, and contract foundries. Amkor Technology Inc. has experienced a remarkable surge in its stock price over the past year, exceeding 121.53%. This significant growth can be attributed to several key factors that have collectively contributed to investor confidence. Consistent earnings beats and record-breaking revenue in advanced packaging and computing have been major drivers of Amkor's success. The company's leadership in these areas has solidified its position as a crucial component in the artificial intelligence (AI) supply chain, with repeated reports of record revenues in AI and high-performance computing (HPC) applications. Strategic investments and expansion initiatives have also played a pivotal role in Amkor's growth. The company's plans to invest $7 billion in a new advanced packaging and test campus in Arizona, as well as its aggressive capital expenditure plans for 2026, demonstrate its commitment to meeting the growing demand in AI/HPC, mobile, and automotive markets. Furthermore, Amkor's positive future outlook has been a significant contributor to its stock price growth. The company's forecast of revenue, significantly above analyst consensus for CONE 2026, representing a projected 25% year-over-year increase, has added to investor optimism. Additionally, the announcement of a 1% increase in the quarterly cash dividend and the smooth transition of CEO leadership have further reinforced Amkor's financial health and commitment to shareholder returns. Overall, Amkor Technology, Inc.'s stock price has skyrocketed due to its strong financial performance, strategic market positioning, significant investment in expansion, and positive future guidance. These factors collectively demonstrate the company's ability to capitalize on high-growth areas like AI and meet the growing demand for advanced packaging and computing solutions. Amkor Technology, Inc. maintains a market capitalization of $12 billion, broadly in line with the industry peer group. Amkor Technology, Inc. trades at a lower price-to-earnings ratio of 32 times and a lower price-to-book ratio of 2.65 times relative within the industry. This makes the stock valued slightly lower than its peers in the industry. This likely suggests that investors are less interested about the company, or it could be that the stock have not caught up to the industry valuation and should further be investigated. The company maintains a moderate leverage profile, with liabilities making up 40% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. Although shareholder equity has increased, the share count has risen while revenue is declining. This raises concerns that equity growth may be driven by dilution rather than business performance. The sustainability of the business model remains unproven. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. The primary drivers of revenue growth or decline can be identified through a review of key industry trends. On the growth side, companies adopting fabless or fab-lite strategies have seen significant increases in revenue. Expansion into new geographic markets, particularly Asia and Europe, has also contributed to growth. Additionally, advancements in miniaturization and packaging solutions have driven demand for more complex products, leading to increased revenue. Furthermore, government incentives such as the CHIPS Act have provided a boost to companies' bottom lines. The construction of new facilities, like the Arizona facility, has also enabled companies to increase production capacity and revenue. Finally, higher customer advance payments have resulted in an increase in unbilled receivables and contract liabilities. On the other hand, revenue decline is primarily driven by the decrease in mainstream product sales. A shift towards more complex products has led to a decline in average selling prices of services, further contributing to revenue decline. Net income experienced significant fluctuations between 2023 and 2025. Initially, it increased from $362,131 in 2023 to $376,116 in 2025, resulting in a net gain of $13,985. However, this increase was preceded by a decrease in 2024 due to foreign currency fluctuations. The net income then decreased again in 2025 by $20,581. Profit margins also underwent changes during the same period. The gross margin saw a decline of 0.8% from 2024 to 2025. Meanwhile, the operating profit margin remained constant at 7% between 2023 and 2024, but was affected by foreign currency fluctuations. The variations in net income and profit margins can be attributed to several factors, including commodity price increases, changes in demand for semiconductors, inflation, wage inflation, interest rate fluctuations, capacity utilization rates, manufacturing yields, and facility changes. The appreciation of foreign currencies against the US dollar also had a significant impact on profit margins. The company is indeed generating positive operating cash flow. This can be seen in the consistent increase in net cash provided by operating activities over the past 3 years. In 2023, the company generated a net operating cash flow of $1,270,020, which increased to $1,088,868 in 2024, and further rose to $1,095,606 in 2025. This upward trend indicates that the company is successfully managing its operations to produce positive cash flows from its core business activities. The company's debt level and interest expenses have undergone significant changes over the past few years. A notable increase in interest expenses is observed, with a rise of $10,499, 16.2%, from 2023 to 2024, and another increase of $5,945, 10.1%, from 2024 to 2025. This trend indicates that the company's debt level has increased, resulting in higher interest expenses. The data shows that the interest expense for 2025 was $75,444, a significant jump from $64,945 in 2024 and $59,000 in 2023. The year-over-year change in interest expense also reveals a substantial increase of 16% from 2024 to 2025 and 10% from 2023 to 2024. These changes suggest that the company's debt level has increased significantly, leading to higher interest expenses. The company's outlook and strategy are centered around investing in its manufacturing capabilities and expanding its global presence to meet growing demand for its products. This is driven by the expectation of continued strong demand across strategic end markets such as artificial intelligence. To achieve this, the company has focused on operational efficiency and cost management, which has enabled it to deliver robust cash flow growth that will support future investments and dividend payments. A competitive cost structure is also a key objective, with disciplined capital investment aimed at achieving this goal. The company's approach to revenue recognition, tax strategy, and foreign currency risk management are all designed to support its overall business objectives. Its investment portfolio is relatively short-term, and changes in interest rates may affect the fair value of certain debt instruments, but will not significantly impact cash flows or interest expense. Overall, the company appears to be well-positioned for future growth, with a strong emphasis on investing in its manufacturing capabilities, expanding its global footprint, and developing a competitive cost structure. The company has demonstrated a commitment to returning value to its shareholders through various means. One such method is the payment of dividends, which has been confirmed for the year 2025. According to the financial reports, the company paid out $81.9 million in total quarterly cash dividends. In addition to dividend payments, the company has also engaged in share buybacks as a way to reward its shareholders. Specifically, it was noted that the company repurchased 89.16 shares of its common stock within the 3 months ending December 31, 2025. This strategic move not only boosts shareholder value, but also reflects the company's confidence in its financial performance and future prospects. Concerns about inventory buildup and supply chain disruption. The extracted summaries reveal several concerns regarding inventory buildup and supply chain disruption in the semiconductor industry. One of the primary concerns is the risk of disruptions due to external factors such as natural disasters, pandemics, and trade barriers, pages 60-18. These events can impact demand, availability, and delivery times of raw materials, components, equipment, and labor. Additionally, fluctuations in demand, changes in cost and quality of raw materials, and production delays due to new wafer and material supply constraints also pose a risk to the supply chain, page 17. The industry's dependence on key customers and concentration of customers in certain end markets further exacerbates these risks, page 18. Furthermore, internal factors such as double booking by customers, lower production yields due to equipment malfunction or operator error, and potential loss of customers due to quality standards also contribute to the risk of supply chain disruption, pages 20-21. The increasing protectionism and economic nationalism leading to export restrictions, trade barriers, tariffs, and changes in trade policy also pose a significant threat to the industry's supply chain, page 23. Finally, concerns about inventory buildup are highlighted due to unforeseen changes in customer demand that may result in excess raw material inventory, vendors requiring minimum order quantities that exceed current forecasted demand, page 52. These risks indicate potential disruptions to the semiconductor industry's supply chain and highlight the need for careful planning and management. That concludes the financial summary for Amkor Technology Inc. Feel free to comment below, and I will be happy to answer them when possible.